Well, hello and welcome to our daily market review and analysis. Monday evening after the UK market closed well before, and US market was on holiday today. So there's not a lot of action. The market is very tight ranged for what was only a very short while. I think there was a bit of volatility early in the morning and around the time when the ECB president gave his testimony. But other than that, very limited action. So really, since we last looked at the Friday, this equity index, there is no real further comments to make other than the fact that we are still looking for this area to top out to make a small retracement, then another leg higher. That's what we're looking for, because this is wave 1, this is wave 2, and we are looking for wave 3 to finalize. Now, there is a thing that we just need to take into account here, is that toward the end, whilst we were expecting market to just continue sideways, which we observed earlier on, if you look at it now on a daily chart, you see there is a little slanting, like an ending diagonal. So maybe this ending diagonal might be almost finished, or probably will be complete within the next day or so, and then we will probably expect a little bit of pullback, but other than that, nothing major. So that's that with the equity index. And with the oil, again with an oil, we've got A, B, C down. So is that a flat? We won't know really, but if the equity market begins to come down in the next day or so, then I think that we will get a zigzag. So we'll get wave A down, which is here, wave A down, wave B up, and we should get another leg down. So we're expecting oil to weaken to about 93 or thereabout. Okay, so broadly speaking, sideways market, nothing very directional at the moment. And in terms of the dollar index, you'll remember, broadly speaking, as a general outline, that we were looking to follow this possible combination of wave formation. That is, we've had ABC to here, which is this one. So that's one complete cycle, A, B, C zigzag up. Then we got A, B and C zigzag down, which is A, B and C zigzag down. So in which case we'll expect a 5-wave move to the upside. So if that was a 5-wave move to the upside, then we are currently looking at that, and we can get some complex movement in a sense that we get a 5-wave move up, we'll get another leg down, and it's quite possible that if you look at it, we might get this 5-wave move up, we'll get a retracement, we'll get another leg up, retracement, another leg up. So actually this 5-wave move we've seen might be just completing one cycle. Then, so when I pointed this out, it might not actually develop like that. So what might happen instead is that we've got this 5-wave move up, so we come down, and I'll make this one in a blue color. So just something we need to keep in mind. So we might get a retracement, then we might get another leg up, and then we might get a small retracement, and we might finish up with one more leg up. That is a possibility which I will at the moment say it's not completely out of place, although it's highly unlikely, but it could happen. Now if that happened, then we're expecting quite a bit of retracement on the equity market. Okay, if this doesn't happen, then we are almost completing the 5-wave we originally identified. So you can see this one here on a 4-hour chart, that we have this wave 1, wave 2, this one being wave 3, which has got 1, 2, 3, 4 and 5. So wave 3, retracement wave 4, and then we're finishing off the wave 5. Now within that final wave 5, we've got minor 1, minor 2, minor 3, minor 4. So it's the very last piece of that fifth wave up. And if you look at it in the 5th wave, to me it looked like it's a rising wedge. So we've got 1, 2, 3, 4 and 5 on a 30-minute chart. So I think that the 5-wave cycle we were looking for is probably complete, and we have a first leg down as a possible A, Then we got ABC retracement back up, which could be, you know, able to go up a little bit more, and then we should continue. So is this ABC or is this wave 1? ABC as a wave 2, and we will be expecting a strong wave 3. Well, we won't really know that until tomorrow, but because market has been very quiet. See, if you look at it here, this is the high. Let me just mark the high first of all to see which one I'm supposed to be. 1, 2, 3, 4, and 5. So we're looking at this one being the high. So I'll put a line there. That one being the high. So go 1, 2, 3, 4, and 5, with the 5 being the failure wave 5. So since then, if you look at it, it looks like we got a strong wave down. So we won't know really if that is wave 1 or is that a wave A. Okay, it's too early to tell. But if that is wave 1, then we've got ABC retracement as a wave 2, then we should be really looking to come down quite strongly. Even if it is wave A, then we'll have A, B, C, so we should be coming down quite strongly. And in which case, if it is A, B, C, then in which case we'll expect the dollar index to drop to about 80 level, maybe 79.90, 79.80 level. Or we will just continue straight down if it is actually a new downtrend and the top is already in. But if the top is not in, then we'll expect it to drop down to something like 79.97, and then we'll go for the next leg, and in which case the dollar may continue strengthening for a good few weeks. But at the moment I am suspecting that we have got the top in and we should be looking to come down. If you look at the daily RSI, then come on. Okay, I can't somehow get that line off. I don't know why. I'll leave it. I won't waste my time on it. But what I was thinking is that on a daily chart we've got no real divergence, and it's a little bit covered by this vertical line I just applied. Okay. See, so that vertical line I've just applied, so there's no divergence from the daily, which is a little bit disconcerting, although not completely out of order, because if you turn it down, see over here we didn't really get a major divergence, you see. So, and even if you consider this one here, the top we had there, in that particular cycle we had equal high, so it's quite possible we might just simply turn over. But on a 4 hour we can see is a clear divergence 4 hour, and we got this minor trend line. So if that one breaks to the downside on dollar index, then I think we are in a new downtrend, but we will really have to wait till tomorrow to find out, because I think without the US market potentially opening later on, like today for example, nothing very much happened really, and because of that we've got a very tight range market. So anyway, two possible scenarios is that we've got the top in and we should be making a new 5 wave down to the downside, or we may come back, retrace, and then we've still got another drive up, a retracement, and another drive up, and in that case we may actually work all out, all the way right up till 8150 area. Okay, so those two possible scenarios. But at the moment we should be in a 5 wave. Now the 5 wave is either finished, or that 5 wave is a part of a first wave. Then we'll have these 2 more drives higher up. So we'll focus on that a little later on. Probably tomorrow review it and see whether there has been any development on there. So we were going to look at the pound pairs. So let's go on to that one now. And in the pound pairs, what we are really looking for is a pound to produce a bottom in the pound dollar chart particularly. Okay, so in a daily chart, pound is, you can see we have a divergence potential, if the pound turns up, we will get a divergence. So divergent potential is there, but is not confirmed. Okay, that's what we're seeing at the moment. Is not confirmed, but is potentially there. So if we get a price rising up on a daily price basis, then we will find that it soon begins to start making its way up, and the RSI will curl up, and if the RSI subsequently breaks above this minor declining trend line, then we have a trend change, and potentially then the RSI divergence will be confirmed. But at the moment is not confirmed. On the histogram, we have a potential divergence for the MACD on daily. On a 4-hour, we do have a divergence. And I think in terms of where the pound is, if we just look at this 4-hour chart, then we were saying we were looking for 5 waves to the downside. So we go wave 1, wave 2, wave 3, and then this what we call like a running flat as a wave 4, and then all of this is wave 5. So if you drop down to an hourly chart on a wave 5, then you can see on a wave 5 you got a very big one, wave 1, wave 2, and then wave 3 I think finishes here, wave 3, 1, 2, 3, 4, 5 finishes here, wave 3. This is retracement wave 4, and then all of this is wave 5. So if it's a wave 5, we probably have, you can see like a little falling wedge being formed, and we've got wave 1, wave 2, wave 3, wave 4, and we are still looking to form that wave 5 down on this 1-hour chart. And within that we've probably got a very small 1, small 2, small 3, small 4, and small 5. So really we are expecting this one just to drop and retest this last high on hourly chart, and maybe tomorrow we might get a bottom in. So we might get a bottom in tomorrow in that area. Okay, and in which case pound could put a bottom in. Only time frame that hasn't quite shown confirmed divergence is the daily. So maybe if, say for example over the night we get a sell-off in the pound, or early in UK session get a sell-off in the pound, then we'll be looking for maybe in the US session period beginning to look for this one to move to the upside. And that is another reason why we could expect dollar to have topped already, because one of the reasons why dollar has been rising so strongly or has maintained relative strength is because of the severe weakness in the pound and the yen. And I think they're both about to possibly make a short-term change, even if it's not a permanent change like with the yen. But the pound I think definitely will be bottoming. So well, whereas definitely it looks highly likely it will be bottoming. We look at the euro pound chart. The euro pound chart, after having made the highs, come down in A, B and C. That's fairly clear. Normally that would be the end of the correction, and we should be then making a new leg to the upside with a 5 wave. But when you look at the upside leg here, it doesn't look like a normal 5 wave pattern. So it looks more like ABC pattern. So we've got ABC down, ABC up. Either ABC up is finished, or we might have a little bit more room to the upside for an ABC. What I mean is that either the ABC, these high retracement, so ABC down is the wave A, and this one here we might come over here. So we've got wave A here. If I put that in parentheses, wave A, then we've got possibly wave B here, by saying this is the B and C, or we might get that B over there, in which case we will have all of this as part of A, B and C. So we will know if we, for example, break this minor trend channel or trend line, then we know that the top is in, and we will then be looking for 5 wave to the downside. If the price continue higher, then we will be looking for almost like a retest of the high and then coming down. So at the moment it's not very clear, but it looks like it is potentially should be coming down, which means that the pound should be bouncing. Not necessarily euro will be very weak. Euro will be weak in relation to the pound, but the pound might become quite strong, and consequently it will start causing the euro pound pair to retrace some of the recent gain. It will retrace back to this sort of level here, around 83.60, 83.50 area, before continuing up. So the euro pound suggests that there is possible pound strength going to be developing. Swissy pound has been very unclear, so I won't spend any more time on that. You know, I've had a lot of problem in actually trying to put the waves on here, and I just can't really make head and tail of this. In a final desperation, I think maybe this is wave 1 in parentheses, ABC back of the wave 2, this is wave 3, and we are currently retracing in wave 4, in which case we've got wave A up. So some of these will move further down the sideway here. So it's quite possible that we might have wave A up. We are retracing this as a possible small bounce, maybe another wave B down, and then I'm expecting another push higher before continuing lower. So Swissy also will lose against the pound, or pound will gain against the Swissy, just like the pound will do so against the euro, and then ultimately the main trend will reverse. So pound will begin to weaken against the Swissy, and it will also weaken against the euro. But in the shorter term, I am expecting pound to bounce very strongly and probably make some gain against the currencies like the euro and Swissy and dollar. And with the pound Canada is still retracing. I think the pound Canada bottom is already in. If you look at the daily, you can see daily has already confirmed divergence, or looking very, very strongly like it's diverging. We'll get a confirmed divergence once we either take out this high, or RSI makes another little low and then makes higher high. Okay, so I think that will probably all most likely develop tomorrow, but there is a potential divergence there on a daily, and we have a clear divergence on the 4 hour on a longer term, not in the shorter term. And in terms of the chart here, we've had A, B, C down, so wave C is a 5 wave down, and I think you can see quite clearly that we do have a 5 wave here. It works out possibly as 1 year, 2, 3, 4 and 5. So what we've got so far is possibly 1, 2, 3, 4 and working towards a 5 for this minor wave 5. Then we might get a small retracement, and then pound will start bouncing. So when we expect a pound dollar to make a small low, we're expecting also the pound Canada to make a small low, and the pound euro pound and the pound Swissy to make a little high, and then they will all change course. So this one will, for example, go up. So we are still within that wave 1 and very deep retracement, but we are looking for strong leg to the upside on the pound against the Canada. But we won't be trading this, but we'll be using this hopefully to confirm our entry or get a timing in the other pair. The one that we are really interested in is either pound New Zealand or pound Australia. When you look at this chart, so we got ABC down, going back from the high we had back in May last year. ABC down, then we had this contracting triangle as a potential wave B, and then again we have ABC down. Okay, so that's what we're looking for. So when we're looking at this one, is the wave C down, where we go 1, 2, 3, 4 and 5 to make a wave A, ABC back to make a wave B up to here, up to there, because this is a yeah, so we had I put these numbers in, wave A, B and C. Okay, so what we're saying is the A and B, and we are looking for wave C to the downside. But I think we were saying that one originally. So these numbers I'm not entirely too sure why I've got them there. So we have 1, 2, 3, 4 and 5. Okay, so we've got wave 5 here. So that's where wave A finishes. Then we got A, B and C as the wave B, and then C over here. Okay, so we got it now. So what we have is this one here as a wave A, and then this one here as wave B minor, and then going up C to give you, so you get larger wave A, larger wave B, and then this one being C. Okay, so we've got that. So what we're looking for on that last wave now is a 5-wave decline, and whilst it's difficult to actually sort of make up the full count, you can see this drop is the wave 1, this is 2, so then we go to wave 3, which is 1, 2, 3, 1, 2, 3, 4, 5. So it's 1, 2, 3, 4 and 5. One, 2, 3, 4 and 5, and then if this is wave 5, we do, I think this one truncated wave could probably be it, and therefore we've got subsequently like wave A or wave 1 up, then we're looking for A, B and C, and this part of the wave is not completely clear to me. You see, if I'm looking for wave 1 down, 2, then 1, 2, 3, 4 and 5, and in which case we should be looking for, I think this last one could well be a final wave, but it's a truncated wave, and then we've got 1, 2, 3, 4 and 5, so the 5-wave move up. So I think the bottom is in pound Canada, and what will confirm the bottom is in is because subsequently you can see we had A, B, C, and that is almost looking like a if I was to say like a bull flag after that short rise up. Okay, A, B and C, so I can draw a steeper line, but maybe we should not have too steep a line up there, but I think this one here to me looks like a possible 1 and 2. So if that's the case, then really speaking, pound New Zealand, we should be able to go long at least on the break of the high here, and then the stop can be just above, just below that. So we'll initially finish with about 150 pip stop, but you have to realize that this pair, when it moves, it really moves sometimes over 100 pip within a day. 200 pips is not unknown for this pair. So I would suspect that this pair potentially is long if it takes out this high on this hourly chart, and then the stop can be just underneath it. And also we could potentially draw, depending on where that low becomes, we can potentially draw minor trend line to the upside, and that would be the secondary thing to guide us, because obviously if it stays above that line, then the low is already in, and if it takes out this high, potentially we could go up. But if it breaks below, then maybe there is a more retracement to come. But I think this is going to be clarified for us between now and UK session opening tomorrow. So pound New Zealand potentially looks a long trade, and I will then go over another thing that will probably help us to get that conviction. But I think the low is in, and I think if the low is not in, it will probably put in tomorrow. Otherwise the low is already in, I think. And then similarly, if you look at the pound Aussie dollar, then pound Aussie dollar has already likewise had a 5-way move down and strong wave up, possibly as a wave 1, and is trying to do a bull flag ABC retracement, and we should be looking for that one to go up as well. It has gone up and it's come back down to retrace almost 61.8%. We might do a bit more retracement, and then that should be also looking to head up. So pound Aussie is in a better situation than pound New Zealand, but I think either of those pairs are likely candidate for us to use the trade up for the pound Aussie or pound New Zealand for the trade to the long side. And these are long-term swing trades that we are really trying to look for. Now, another confirmatory fact of this would be is I'm going to take you on to the where is it? Looking for. Okay, let me go do it the other way. Okay, so these currencies are the New Zealand dollar pair, New Zealand dollar. So New Zealand US dollar, New Zealand euro dollar, etc. Okay. Now the New Zealand against Australian dollar, we can see that this pair was in this rising trend channel, and it has recently broken below, and on this weekly chart it looks very weak. So between the Aussie dollar and New Zealand dollar, the Aussie dollar I think is the weaker part, because it has already broken below this rising trend channel, and it's almost like fell below, went back to test it, and it's broken down. If you look at the RSI on the weekly, it's still strongly heading down. So I think the Aussie dollar is going to be weakening more than the New Zealand dollar, but they will both be possibly weakening against the US dollar. Now this is the chart I was going to look at with you. For quite some time it has been perplexing me as to which way New Zealand and Aussie dollar are going. I think they could be perhaps either topping or already have a top in, or they'll be in a broad range bound market. Now the reason why I'm saying this is that from the low it has gone up in ABC. If you look at it longer term, although we don't have a long-term historical chart here, other than from the low. So you see from the low here, price was coming down from the left, far left over here, was coming down. That was the low. So then it has done A, B and C to the upside. So even on a monthly, you can see we have a very strong divergence here. Okay, very strong divergence on a monthly, suggesting not that it's going to drop down, but suggesting that the momentum to the upside, when you compare from here, is weaker on this top here. Okay, now if we close in to a daily chart, then this one here, you can see it was wave A, B and C. So this wave A was ABC zigzag. We had a return ABC and we expect another ABC zigzag to the upside. So when you look at a weekly, you can see this wave A, wave B and wave C, and they're both similar sort of length. So I think from that perspective, that particular count or wave is probably over. And I'm running into headwind about what others are saying about this. If we do that, see, it's not quite ABC equal, but it's you don't have to have absolute equal. This one is almost like 75-76% length of the wave here, but I think it's pretty mature. If you look at it on weekly chart, between this high and this high, then again we have a divergence, right? And so we have a divergence on a monthly, we have a strong divergence on a weekly. And then if you look at the trend lines for this particular wave, ABC is actually over when you draw a trend line like so. So when you broke below that, all the price action here is below that. That means whatever that wave was is complete. Well, if that was ABC, then maybe it's over. Or that ABC and this one here, what is it trying to do? And that's what I've been trying to work out. And I've spent a lot of time looking at this. And I have in fact done this many times. And I've often felt that the top is in. And yet I will admit that, for a while it looked like a triangle. But now with this price having gone up there, is no longer a triangle. So for at least for the New Zealand, it's no longer a triangle, it's something else. So what something else is it? I think this is what is happening. From the low, we had A, B and C, and I think we've made that as a first zigzag up. So we got ABC for this section here, wave B back, another ABC up there. So we had two zigzag up, and both of them together makes one complete chain. So this is what I'm now, this is my another big picture analysis. I think is beginning to come together, right? So this leg up is a larger A, larger B, larger C, and is what is giving me is a big double bracket A. That's what is giving me. Okay, so what I'm now expecting is basically some sort of a retracement of that, and retracement should be ABC to the downside. Okay, so then we'll finish up with the big B somewhere over here, somewhere over here. So if that's what I think is happening, then I'm correct in saying that this wave here is finished, because we've got this big one completing with, so this is a significant top for the time being. And then we've started correcting, and we're going to correct in A, B and C to give you this one here. Okay, so what I'm looking for now is that this one here is a wave A, a small a in double parenthesis. Then I think what we had is A, B and C. So we've got this one is giving me a wave B, and is formed by this A in bracket, B in bracket and C in bracket. Okay, so now what we got is on the daily chart. See, we have come up from the low. Okay, so we had this ABC down to the wave A in double bracket, then you go single bracket A, single bracket B, and single bracket C to give us double bracket B. And in that we've got A, and you can see this one here is a rising wedge pattern. So we've got A, B, C, D, E, and that A, B, C, D, E I think is complete. If you look at the triangle, look at the overall RSI, then you can see on the RSI even that we have a potential what looks like to be a triangle. Okay, we've got, and maybe this triangle is a little bit skewed. You can keep it like that. So you see you got A, B, C, D, E on the whole big picture, and this part here is definitely to me like a rising wedge. See that part there is like a rising wedge. And interestingly, we had divergence on the RSI. See this one here. Okay, RSI divergence, and if you look at that this part here, you see you can't say this doesn't look like a triangle, and is resembling very clearly what the price is showing here. So we've had a wave A, B, C, D, and E, and if you look at the daily price bar, and remember last week on a Friday I was suggesting that this New Zealand may well have topped. Okay, you see, so we've had this day before on Thursday we had this strong wave leg to the upside. On a Friday we had this sell-off, and then we had this one here, just I think the weekend bar and today's bar. So weekend bar and today's bar, all it's done is just gone, oh, wrong line, all it's done is just gone sideways. Like so. So it's like a dodgy bar. So really speaking, if we were looking to short this one, then ideally it has dropped and it's done partial retracement. So either we have a stop sell order here with a stop just above 50, about 60 to 70 pip possibly, or you can, so this is basically a sell. And when it's a sell on a Friday, I was a little bit uncertain, and I was saying that we might only come down to this low. I think we will come down to that low, but we will be progressing to the downside. And the other thing that we'll be looking to do is, so far if you look at just this area here, then we had a zigzag down for a wave A, and we had a zigzag ABC back there for a wave B. So wave C will be 5 wave move. And if you do the entire leg up from the bottom, then I think it is, and if you would do Fibonacci, then 50% retracement I think is very minimum, and also it brings you into the vicinity of where previously there was some degree of support, could become support. So, and then we have this rising trend line we can put on here, which I'm not sure exactly how that will come into being, but we are looking for 5 wave decline. So that will give us ABC down. So that ABC, so this is the flat correction. So we got zigzag A, zigzag B. So we're expecting 5 wave move down. So in that case, if I'm correct, we'll get a very strong move down probably bringing us all the way back to somewhere about 65, 0.65. So then now that trade is quite substantial, I think, and therefore we should be looking for confirmation of that and shorting. So if you wanted to short this one, it is possible to short. If you simply drop down to 1 hour, and then on a 1 hour you can see that it has come down in a 5 wave down. So 1, 2, 3, 4 and 5 down. So we got A, B and C. So it's going to still retrace to the upside. So this is what it's going to do. Okay, it's retracing to the upside, and I think we've got wave A, so we might get a small drop and then we're going to get another leg higher. That's what's going to happen. So what I'm now looking for is, rather than do a stop sell with a higher risk, what we're looking for is for this one to produce another leg up, and then, like I said on a Friday, is to try and short in this area somewhere here. Look for some confirmation. Either we have this minor trend line, for example. So if that one breaks, then we know that the retracement is over, something like that, when we get the price action confirming that trend line, and we'll get another leg up. So it'll be AB equals CD kind of a thing on a small scale of 1 hour. But we're looking for possibly 84.75 area, or maybe even higher, around 84.90 somewhere, but more likely 84.75 area I think would be good area. See on the left hand side here, structure wise, that seemed to look right, looks reasonable. See, resistance, support, now broken back down, could become potential resistance. So we can enter short there, and then the stop will be initially above there, which is about 60 pip, but then once you get this trend confirming, you can bring your stop in fairly close soon after. And the important thing with most of these is the moment you get about 100 or so pip in, is that by then you lock in good few pips and bring your stop to break even plus about 20-30 pip stop in profit. So if you then stopped out, you stopped out with some profit, but otherwise you'll be looking to go low, and we are looking to go low. So obviously when you look at the structure, what we might find is that this one then come down here, come to the trend line. It may probably bounce back a little bit, but then broadly speaking it will continue down. In a longer term, we are expecting this one to produce this big 5 wave to the downside. So I think there is a lot of money to be made from New Zealand dollar against the US dollar. For some reason, the absolute minimum, I'm expecting it to come down to this area here. So for example, if we did A here, ABC zigzag, then ABC zigzag back here, and then we expect 5 wave, and it simply came here, then I'm expecting it to come to at least 0.71. So in that case, we've still got decent profit, but still talking about nearly 1200 pips. So if it doesn't come here, then I'm expecting it to come to this area here. So minimum downside target for New Zealand dollar is somewhere about 0.7250, and if you round it up, then I'll call it 73. 0.73 is minimum. I think that would be worth trading. But if we get really going, then we might have a big 5 wave which will bring us to 50% retracement, and I think it's not unreasonable to expect 50% retracement of the larger ABC zigzag, because what will then happen is, once you done this larger ABC zigzag, is we will go back up possibly in an A, B and C to complete this upside. We might then go and retest this high, otherwise I think this is a very significant top. We will probably never revisit that for a long time. It's quite possible that we might actually then this continue cascading down. But at the moment I'm being cautious, and I think is coming to this area, previous support, resistance, potentially becoming support. So I'm expecting it to come to 0.72. So if the pound New Zealand weakens, then you can imagine that, sorry, not pound, New Zealand dollar weakens against US dollar, and we are expecting pound to strengthen against the US dollar, then you can realize that we are in a good trade for taking pound to the upside against New Zealand dollar. And New Zealand dollar, this is the giveaway, because this is rising wedge and is complete. So we are potentially in an area where we can short. Okay, now in the same way, if you look at this in the this is the correlation chart. So what this correlation chart does, it's a weekly chart of this red and blue is a Euro New Zealand, and then the New Zealand dollar, I have flipped the chart over, so in other words it's upside down, and because of that they both resemble very similar. And what that means to say is that with the New Zealand dollar flipped upside down, you can see they both go together more or less. There are times when they're a little bit out of sync, but otherwise they're following fairly closely. And we are expecting the Euro New Zealand to go up because Euro is strong. So then this chart will also go up. So how far will it go up? We're expecting it to at least come to this sort of level, which is about 187. But Euro New Zealand might come even higher. So if that happens, then you can imagine that this pair, which is the New Zealand dollar US dollar, will also go up like that, and that means New Zealand dollar will be weakening even against the US dollar. Okay, so we are expecting New Zealand dollar to at least come to about 72 or something. We were saying that would correspond to this kind of level here. So I think there is a good reason to expect New Zealand dollar to weaken, and then if we quickly look at the Aussie dollar, then Aussie dollar is pointing the same way, because Aussie dollar has got a similar sort of structure, a little bit different, but this ABC down as a wave A in parentheses, double parentheses, ABC back up as a wave B in parentheses, and I think we are now working our way down, and in that we've got a zigzag ABC down, ABC back up, and we are looking for that one to come down. If you look at a larger time frame, then that too has come from all the way there. So we've got big capital A, big capital B, and then we've got this one here to form capital C. We've got potentially, I think what this one was is yeah, what this one is doing is that we had A, B and C to give us wave A, wave B, and this one is 1, 2, 3, 4 and 5 wave up. So 5 wave up means that we should be getting A, B and C back. So I'm expecting Aussie dollar also to weaken to somewhere about this sort of level, around 70, if you round it up, say 0.80. And therefore when you look at this now, which previously looked like a triangle, and I think many in the industry are still thinking of triangle. I was never convinced, but I think that triangle is probably failed, and it's never going to be a triangle. So instead what we are looking for is we're looking for ABC zigzag A, ABC zigzag B. Okay, so now and the ABC zigzag B actually finishes here. So we should be looking for a 5 wave down move. So this one goes over here. So what we have is ABC here, big A, ABC back up as an A, B and C. So it's a big expanded flat. So this one is a big B, big A, big B, and it's an expanded. So we should be expecting 5 waves. So in the same way we're expecting 5 waves in the New Zealand dollar, and they both will be retracing some of the rise to come into that area, and then possibly they will both make another final attempt before eventually then dying out. Okay, so we need to watch this and just look for confirmation but potentially Aussie, New Zealand, both currencies against dollar are potential short at the moment, and that confirms our reasoning that the pound will strengthen, and therefore pound will strengthen against the Aussie and against the New Zealand. So that is all I think from my end right this moment in time. If I was to quickly just look at the euro pair, and in particular the euro Aussie chart, then the euro Aussie chart, we were saying last week that we have a possible downside move. Part of it has happened. I'm not sure that is complete. We were expecting a low, a little bit lower down, but it didn't come that far. So if you look at this structure here, then we go to wave A down, ABC up as a wave B, and then we are getting 5 waves to the downside. You go 1, 2, 3, possibly 4 and 5. So if this works out, we're expecting another leg down before we are ready for going long on a euro. But we have to be mindful of the fact that we may already have the low in place. If I look at it in hourly chart, then the way I'm looking at it is we got A, B, C zigzag down here is wave A, then we got A, B and C zigzag across there like that. Okay, then we should be looking for 5 wave down, and then go 1, 2, I think this here is 3, this is 4, and we should be coming down for a 5, I think. So we should get a retest of this last low, which is where I think we are likely to find a potential long trade on a euro Aussie chart. And if the low is already in, then what we expect now is possibly, say, ignore this top, but we possibly say draw some sort of a trend line connecting the other one, just to find a way of somehow, say, if you did that, maybe we could do this here. It's nearly there. Okay, ignore the spike, but use a closing candle. That looks better. Okay, so if you use a close of this candle here on the hourly chart, then you can see that connected. So providing the price remains below that, we would allow it to go as far as it wants to. If the bottom is in, then it will do a retracement of 1, 2, 3, 4 and 5. So ABC retracement back down, in which case we might get a potential entry down 129.50 area, 129.25 area, or a little bit lower, 129 area, around here, or retest of the low, and then we are able to go around, potentially entering that long trade. If you look at it in the daily, you can see it will come down into the area where previously there was resistance, becomes support. And also we have this 200 period moving average, 100 period moving average, which is also rising, and potentially we have this rising trend line coming from the bottom, connecting the low and this next higher low. So those things will enable us to confirm potential long entry in this area. Otherwise we'll be looking to go long round 129 area. So I think that is all from me. I won't make this one particularly very long. There's not a lot to add, but I think the Aussie New Zealand dollar chart, and there is one point I was going to share with you, is on the commitment of traders report. This is talking about New Zealand dollar. What is interesting, right? What is interesting is that the non-commercials have reduced their long position by 1,500 contracts. So it's still a relatively small number of the long, but the fact that they have reduced it to the long. Okay. And if you look at the short, then they have reduced the short a little bit as well. But the more important point is the commercials. These are like banks and institutions. They've actually increased their net short. So usually the non-commercials, large speculators, will not increase their net short until they're rather toward the end of the cycle, whereas the commercials have already increased their net short. So in other words, last week they were about 31,000 contract, and today, or last week on a Tuesday when the data was released, they were 29,500. So it's 1/30th. So 1/30th, you could say it's about 3% reduction, 3% reduction of short, whereas the others have only reduced the long position. So at the moment we're still early on, but this was last Tuesday, and at last Tuesday we did not have the conclusion of the rising wedge that we are looking for in the New Zealand dollar. We did not have that. We were last Tuesday, we were probably still over here somewhere, you see. So we've still had that leg to run up. So I think from that perspective, we are in early stage of New Zealand dollar actually weakening, and then we have some news related event coming up, I think tomorrow, with the governor of Bank of New Zealand saying something. But anyway, we will need confirmation of this. Either we can enter short as we would normally enter short, with the view that we'll get at least a retest of this rising trend line, which is not a lot, but then probably at least coming back down to this sort of low. But more likely we'll get a big 5-wave move to the downside. Okay, so we'll cover some more tomorrow. Tomorrow we'll have a bit more price data to actually analyze and see, for example, dollar has topped, and whether in that case the euro will start going up or not. In the shorter term, euro, for example, is also looking like is formed a bottom on a 4-hour chart, and on a daily chart we may have a bit more downside left. But I think what is more likely on a euro is that since the 137.10 high we've done, you can see here what looks like to be one swing, A, B and C. I'll forget the ABC. You can say this is W, X, Y, X, Z. So in other words, we've got three drive to the downside. So 3 drive to the downside will probably complete the downside, at least for the while. And therefore what we might have, because we've got a triple zigzag, so we might get now A, B and C to the upside, probably back to that sort of level, and then we will get another leg lower, and that would complete. So this is what we're going to zigzag down, zigzag up, and we're going to get another leg down. So we may actually find that the dollar also does something similar in the meantime. So what dollar will do is that it may have already topped, and so dollar is going to decline, then do partial retracement before continuing down, and then the euro will go up and then make another leg down before going up. Or we may already have the bottom and the euro will go straight up. Okay, so those two possibilities for euro USD. The ideal thing would be is for euro to go straight up, because with the dollar index we're expecting it to come straight down. Then it would make it easier, but then market often is not going to make it very easy for us. So that is all for me. I will stop the recording here unless there's any question or comments, and then I will try and I will post the recording out soon, and then tomorrow when we meet we may have a bit more clarification about dollar and about New Zealand dollar against US dollar. Okay.